Hello members, this is Kavita Agrawal and today I've come to present to you the Let's Get Technical series in which we will discuss about RSI, divergence and spot some failures. We will also see why those failures happen and what to do in the situation of those failures. But of course, before we start, let me talk to you a little bit about what RSI is and what divergences are. So RSI stands for the Relative Strength Index, which is one of the most popular, most commonly used momentum indicators in the world of technical analysis. Why is this time-tested indicator so popular and why has this stood the test of time? I believe the secret of success of the relative strength indicator lies in how beautifully it adapts to every stock, commodity, index, currency, or anything that can be mapped on charts. The formula itself inherently takes care of the personality and range that a stock is capable or underlying security is capable of moving within a given time frame, which is by standard 14 period. I have seen that experimenting around with the standard period of 14 in the RSI can give you wonderful results, but make sure, at least for me this works, make sure that you have a solid reasoning behind changing the period of the RSI and make sure that you've back tested it enough on your kind of trading. Also, one thing to note is the RSI setting itself and the strategies that you apply on RSI. For example, a lot of people may use exponential moving averages on the RSI itself. The strategies that one person is using may not be very relevant for you because your underlying trading ideologies or application of trading knowledge may be very different. You need to take that into consideration. Now, the RSI is, like I said, one of the most popular indicators, not just in India, but worldwide. Right now, the most popular analyst who's using the indicator of RSI is Andrew Cardwell. And within India, I also know personally a lot of analysts who absolutely swear by the indicator. That being said, of course, like everything else, RSI is not free of issues. It is not fail proof in every situation. But yes, the probability of success can be improved significantly if you're using the indicator properly. And also remember, it takes a lot of time and many years of practice just to get that right. All right. With that, let's move towards the chart of KPIT where I have spotted one example of a divergence failure. After that, we will move on to the chart of Nifty where I will show you few more examples of such divergence failures. And after that short discussion, I would like to answer your stock queries. So what you can do is while I present or at the end, you can just add your comments in the chat and mentioning the stock names where you want analysis. And I will look at the charts live for you to help you out because of course today's session is called Let's Get Technical. So it's all about technical analysis and the session will go incomplete if I don't discuss charts with you. So this is the KPIT divergence failure that I want to discuss with you. This is a screenshot and we will shortly move towards the chart as well where I will show you the live analysis on the chart. But you can notice this is a 75-minute time frame where I have Bollinger Bands also set on the chart. And you can spot here that there is a big RSI negative divergence. So for someone like me, who's a technical trader and who believes in the RSI very much, seeing such a big RSI negative divergence on the 75-minute chart close to a trend line would naturally trigger an exit in the position. So let's move to the chart and see how we could have handled the situation better and whether there was anything on the chart which could have warned us against such a happening. I'm going to remove the Bollinger Bands from the charts because right now they are not very relevant to our discussion. And like I said, that divergence happened somewhere around November. So this is where the divergence actually happened. Now, if you look at the longer time frame, the divergence wasn't completely out of place. And why do I mean that? What do I mean by that? If you see, the divergence happened somewhere around this part, right, where the price was making higher high, but the RSI started making lower highs. That's what a divergence is basically. Now, the reason why this must have happened was the trend was definitely close to completion. So this last uptrend that we saw was actually an extension. But when you consider the time frame or the time horizon for which I was trading, this move that followed was a pretty significant one. It was a 70% move in just a matter of 20 days. That's a huge move. So the reason why this divergence didn't play out as well as we'd expect, so usually when such a big RSI negative divergence shows up, the expectation is that the price will fall enough for the RSI line to go back and touch the level of 30. In this situation, that did not happen. Why? The reason is the trend. The trend trumps all indicators. So if you look at the chart of KPIT, here the trend has been extremely strong. Strong to the point that even when RSI showed the negative divergence, the correction that happened halted automatically at this blue trend line, which is nothing but the 200-day exponential moving average. And not only that, the RSI barely touched the level of 30. And if let's move on to the daily chart to see whether there was any more indication on this about this particular chart. So on the daily time frame also, we could see that RSI was well above the level of 70. When RSI is spending so much time above the level of 70, then it is a very good indicator that the trend is about to continue, right? So here, for example, you can see that when the actual peak happened, when the actual peak out happened with a last extension rally, here the daily chart continued to remain up. Why? Because the underlying trend on the daily chart was still very positive. This small correction that you see is not the end of the rally, and that is exactly what was being indicated by the daily chart failing to give a negative divergence. Now the 75-minute chart, as we saw, did give us a negative divergence on both instances, because on the time frame of the 75-minute chart, this divergence was obviously not a failure, it was a success, because if you look at this correction is approximately 45%, which for a swing trader is pretty significant, whereas this correction is nearly 15%, which if you compare to the previous uptrend that happened, which was around 75%, is nothing. So ideally it would have been great. So how do you take care of a situation like this where you are seeing a negative divergence? Should you exit your position or should you stay in the position? So the answer to that actually lies in using Fibonacci ratios. What you can do, instead of blindly, when you can see that the trend of the underlying is so strong, it is better to not immediately exit the position. It is better to trail the position with stop losses. So in this situation where you can see that the trend itself on the RSI peaked out nearly what can be called as the 50%, and here you can see a double top was formed somewhere. Let me just zoom into this part. You can see that a kind of a double top was formed somewhere around the level of 525. What would be sensible is to use a trailing stop loss. So personally, where I prefer to use the trailing stop loss in such situation is right below the low of the wave which we are mapping. So for example, this is the up wave that we are dealing with. So this is the up wave where we are at. So we are at this situation where we can see that the stock has failed to move above this level because of the resistance coming in from here. So where would I like to put my stop loss? right below this level. And how would I like to put my stop loss? I wouldn't put my trigger price and my execution price right here at 424. I would ideally put my trigger price a little bit lower and my execution price a little bit higher. This saves me a very small margin which compounds over time and gives me better exit strategy. Sure, there is a little bit of risk of no execution, but it is worth it. And of course, we have to monitor our trades, otherwise what is the point of trading? So now if you have any questions about the chart of KPIT and the failure of divergence that I showed you, or the solution that I showed you, that is using trailing stop loss and how to use the trailing stop loss, feel free to add those questions in the comments. Now I would like to move towards the chart of Nifty and showcase some of the divergences that I have noticed on the chart and how they have worked and how they have not worked. Alright, give me a second. Okay, so now on my chart, I am sharing the Nifty 15-minute time frame, and let's take a look at some of the divergence, and we will move a little bit back for this purpose. So let's study from here. This is basically the 13th of May 2022, and here we can see that a small negative divergence was formed between which points? It was this point right here as well as this point, which is the lowest point. Now you can see that the price is clearly made a lower low, but on this is a classic positive divergence, and as a result of this we saw that the price moved around 6% within a time frame of just 13 days on the chart of Nifty, right? And before it came down, we also see that there was a classic negative divergence which again took the index back to a new low at the level of 15,240. Now around that level, if you notice very closely, there was a very sharp positive divergence. These positive divergences are very rare, and you have to be very observant to be able to notice them, because you can see that there is a bigger negative divergence. However, when this peak was formed, when this bottom was formed, you can see that RSI is not exactly stable or above the level of 30 here. However, when it formed the very next divergence, it was beautiful because RSI moved above 40. So when you're studying divergences, or when I have studied divergence over the past many years, I have noticed that whenever in RSI divergences, whenever one of the right side end of the classic RSI positive divergence is above 40, that divergence is usually a lot more effective than any other kind of divergences. For example, the divergence that you see here, where even though there is a higher high on RSI, the right hand side of the RSI is not above the level of 40. In fact, it's not even above the level of 30, which did not result in a rally instantaneously. And that being said, let me just give you the obvious disclaimer that it does not mean that every time the RSI divergence happens with the right side above the level of 40 is a guaranteed rally. Never happens like that, correct? Okay, moving on. So here again you can see there is a small negative divergence, and with negative divergence also you want the right side of the right extreme of the end of the divergence point to be at 60 or just below 60. Usually I have seen that effective negative divergences see that the right side is right at 60. Mostly it's barely below 60. especially during bull trend. Even on the chart of KPIT, you see why I noticed this one is a failure of a negative divergence was because the divergence happened really beautifully, and you can see that the RSI was well at the level of 60 for quite a bit of time, even though price continued to make a higher high. Right, so again here we see another negative divergence, even though not very effective, and here the price correction was not very significant either. It was barely around 300 points, which for an intraday trader can be significant. Now here we have another example of a failed negative divergence. If I just extend this one, now what is the reason for the extended for the negative divergence, failed negative divergence here? Again, if you look at it, the price was extremely bullish. We even see that the breakaway gap had happened here, and usually after a breakaway gap or trend line breakout, if a negative divergence happen, it usually leads in a sideways correction or a fizzle out kind of movement. And here you can see that the failed divergence ended basically with a nice gap up, after which Nifty continued to rally to the level of 18,000. Now here at the peak, very much at the peak of almost exactly 18,000, we saw a proper negative divergence, which then led to the correction. Now it is very natural that for somebody who's depending wholly solely on negative divergences, after seeing such a big failure of negative divergence, they may be skeptical of taking the next negative divergence, which in a sense looks much weaker, but is also at a much higher level. And if you remember, 18,000 in the mid of August was a time when euphoria had become very high, because we were seeing massive gap up openings in the market. But that's the thing about indicators. When you're committing to an indicator, when you're committing to a strategy, you need to stay true to it, irrespective of whether you're feeling good about it or not. And with RSI and divergence trading, it is the same thing. The only thing is that you cannot wholly and solely depend on the divergences to do your trades, may it be short term, may it be swing trade, may it be long term trading. You have to take into consideration other factors, for example, price action. So if we move on from here, we can see that here there was the big gap down and then lots of volatility in the market in this particular session. Moving on, here at the level of 16,770, we saw a very big positive divergence, which gave way to a 4% relief rally. Now even this relief rally was actually part of the correctionary wave, which had started from the level of 18,000 itself. And here you can see that RSI had reached way below the level of 30, and usually when this happens, when RSI breaches the level of 30, so surely you can almost take it for granted that the price is going to slip lower to the next probable trendline support or the next probable accumulation zone, which in case of Nifty was this green zone as I have marked on my chart, as well as the trendline support, which is already visible. Now, if you've been following my sessions for a long time, you know how I draw my trend lines, right? I join two important price points, and then I'd start extending my trend lines, cloning my trend lines to capture the real underlying trend of every security, index, commodity or currency, right? And that is what we saw here also. So once a big gap down happened here, which incidentally was a level right where the stock had taken support on the higher level trend line. As soon as this level got breached, we can see that RSI gave a big gap down opening, which took it straight below the level of the next trend line, and then it continued to slip to the very next support zone, right? Okay, so next what we see is that the correction technically only got over when after this big breach of the level of 30, there was a strong positive divergence with RSI right side being at the level of 40 and then started to move up. Once it started to move up, there was another instance of a failed divergence, and the reason was again the same. If you look at the price of Nifty, lots of positive divergences, lots of gap ups, lots of very strong momentum was clearly visible. And when the momentum is so strong and resistance zones are being taken out just like that, making big bets on a just purely based on a divergence is basically going against the trend. And in the market, we all know the saying that the trend is your friend, so you don't go against the trend. You have to choose your bets, and looking out at other important zones is very important. Now here's one more thing to notice. There was another negative divergence here, and it worked a little bit. At least for someone who's doing short-term trading, this would have worked very well. And one indication to it working would have been that RSI, that Nifty did struggle to go above this particular resistance zone. It took 3 attempts to go above this zone. So this was an indicator. However, I personally would still not have taken this trade, because there was a big gap up here which did not even get filled, which in itself is a testimony. However, when this positive divergence here occurred, this was a good time to actually enter a good trade in the chart of Nifty based on divergence. So if we go off to the recent price action, we can see that RSI again gave a small negative divergence on the 15-minute chart, but as you can see, the momentum has continued, and this very negative divergence itself also did not get completed. And if we look at the high of the day for Nifty, it is around the level of 17,818, and it appears like it has already begun to slip. Now, you might also be aware that 17,800 is a level that I have been holding on to since a very long time as a very important resistance zone. And we can see that today 17,800 has been touched, and this level has played an important role in the past also, specifically around the end of first week of March. So today we've reached the level of 17,800, and there is negative divergence still building up on the 15-minute chart, but it is not completely done so. And we can see that there is a trendline resistance at the level of 17,917, and considering the momentum of this last upside on the chart of Nifty, there is a possibility that our resistance level is going to shift, or rather the presence of this trend line is going to pull Nifty towards itself. Nifty is going to take resistance here. It's very important to see what Nifty does beyond this stage, but what remains very, very important is that you maintain your stop losses and you tighten them up, because when the market falls down from here, you would want your positions to be cut out, and when it starts to move up again, it's better to make fresh entries. All right, so with that, I am done discussing the chart of Nifty and the chart of KPIT, which I picked out for you. I hope the session on RSI and divergence was helpful for you. Now, if you have any questions from your end, please feel free to post them in the comments. And if there are no questions, then we will end the session. So Naina Deshmukh ji, hello to you. Thank you so much for joining our session. Ravi Bhatia ji, hello to you too. So you're asking how to identify hidden RSI divergences. I believe the best way to identify any divergences on the charts is to look at multiple time frames instead of just sticking to one time frame, because that helps you give confirmation. It helps you listen to the echo of the different time frames in the stock price action. And it's always the best to take action, especially in a higher time frame, when one or two lower time frame and one higher time frame than the time frame where you're on which you're basing your decision all tell the same story. Without that, it's very difficult to trade with divergences, or any trade for that matter, any indicator for that matter. And specifically for hidden divergences, again, you have to look at charts very carefully, and it's not a simple answer at all. So if you're asking about the theory of hidden divergences, then that's very much on the internet, and you're welcome to read that up. But the proper way to identify is to look at multiple time frames and then decide whether it makes sense to you or not. So we have Raghava, and he's asking the question that he's invested in TCS. Okay, he's asking whether he can invest in TCS or Infosys with a long-term view. So let me just take a quick look at TCS and Infosys from a long-term perspective and try to help Raghava out. I would suggest, Raghava, that you hold on making investments for the time being, because I'm not seeing a very strong indicator of positivity, especially because on the 75-minute chart of TCS, let me just share my screen with you. On the 75-minute chart of TCS, as you can see, there is a strong resistance which is coming in from the 200-day moving average, and there is also strong resistance coming in from the level of 60 on the chart of on the 75-minute chart. So I believe that TCS can fall back down to retest somewhere around 3160, which a sense is not a very big price for a long-term investor, but I would still suggest that you wait out a little bit and wait for some more correction, at least on the chart of TCS. Let me take a look at Infosys. Okay, now Infosys is a different story. I believe Infosys is very good for taking a long-term position instantaneously, because it's showing it's taken wonderful support at this level of 1364, right? And if you look at the intraday chart on the 75-minute, there is strong positive divergence which has already been wonderfully responded to. As you can see, there's been a rally of just 4% alibi, but you know, it's a response to the positive divergence, and it's now taking strong resistance from the 100 EMA. Now, depending on the market, how it goes, we can expect some movement here. But if you want to take a long-term position, even in Infosys, I would suggest you to use a stop loss. There is a chance that Infosys is gonna go up, and you can expect around 30-40% returns. It's difficult to commit to more than that, because again, you can see there was a very big negative divergence on the daily chart, right? So we have to maintain a stop loss right below this support zone, somewhere near the level of 1340. So Raghava, I hope you found that analysis useful. If you did, please like this video and leave a comment. Now we'll move on to the request by Mr. Anil, where he is asking about ITC for the short term. So ITC is not looking positive for the short term, and I've been saying this over and over again since some time. Here on the daily chart itself, there is a negative divergence after a sideways consolidation. The price of ITC has given a sort of breakout today itself, but I would still wait out to see whether this is sustainable or not. One of the main reasons being that Nifty itself is showing a lot of negativity. You know, it's around the level of 17,800, and like I just showed you, 17,800 to 17,900 is a good resistance zone. So we need to wait for that to play out. If this were to be a fizzle out or a fake negative divergence, then we would get to know, but we will have to wait for the RSI to move at the level of 70. So Anil ji, if you have short-term positions, long positions, I would suggest you maintain a stop loss. Now, where would the stop loss be? Let's just take a look at that. So this is the support zone, and we can see that this is a good point. So okay, see, I as a swing trader, even on my short-term position, would prefer to take a stop loss somewhere near 368, which from the current market price is somewhere around 6.5%. Right now, if that is something that works for you, go ahead. Otherwise, if that seems like too much, then I would suggest you maintain a stop loss at somewhere around 387. So Anilji, I hope you found that analysis of ITC useful. If you did, please don't forget to indicate that in the comments and also like the stream. So Naina Deshmukh ji is asking the same question that Ravi ji asked. I hope you found that answer that I gave useful. Is there any stock where we can invest in RSI divergence? So Swaminathan ji, you are asking about a stock to invest. The answer is not that simple. I can tell you lots of stocks which have divergences, but then you will also need the trade setup with proper entry exit allocation strategy. So I will not be able to answer that blanket question for you. I will however definitely help you out, and that would be by doing something simpler. I'm sharing the link to my Telegram channel. You can join that and you can find RSI divergence based stock ideas there in the channel itself. Okay, now moving on. Manish ji, आपको भी hello. Ma'am, any stocks to invest? So Manish ji, same response to you. Please join my Telegram channel and I'll be very happy to help you out. All you have to do is click the link I've shared in the comments. Okay. So one last thing. I believe that we are done with discussing all the comments, and also we have reached the end of the session. It's over 30 minutes. So before I go, I want to remind you that you can connect with me one-on-one if you want to ask your stock queries. Just use the link which will be shared by the ET moderator in the comments, and you can connect with me to discuss about your portfolio, your financial planning strategies, your current stocks, or future planning, anything. So with that, I will take your leave. I will see you again on Friday at 2:30 p.m. with the Market Outlook series, where I discuss Nifty intersector chart analysis, Bank Nifty, and an important sector chart which is giving some good signal. So until then, stay safe, stay invested, keep your stop losses tight, and namaste.